All right, appreciate that, Dave. Hope everybody's enjoying the program so far. And I have to say, you're going to love this one. We have an amazing power-packed education and the allotted time. And what's great about this pattern is they occur in all types of trends, up, down, or sideways. Now, some of the broader markets, the Qs, SPY, have made all-time highs. So you might be asking yourself, well, why do I care about a bottoming pattern if the markets are all-time highs? And the answer is because there's many strategies to trade: stock, ETFs, options, long, short. We have what's called a catch-up trade. So the laggards, they can catch up. And I'm going to show you a number of very popular stocks. Some I'll show you near the end that we're watching right now. Popular names: Target, FedEx, UPS, Merck. I mean, they're all bottoming patterns, so they're nowhere near all-time highs. This is our technical approach to trading anything that moves. One thing, I gotta say, unfortunately, that you're gonna get in many of these presentations like this, I mean, they're great because they put together, talented traders, but you gotta be careful about the ones that are trying to promise simplicity, quick road to successes. I have a magic oscillator. I have this super code 1, 2, 3. It's easy as that. Everything has to do with objective price action trade analysis. So that's why we start with a compelling pattern on whatever time frame you're trading. It applies all time frames the same. It applies to any instrument: stock, futures, commodities, ETFs, Bitcoin. It doesn't matter. The reason price patterns work is because they reflect the collective summation of all market participants that are trading that instrument anywhere in the world. So, brokers can lie, analysts, the officers, they can pump their stock, but you can't lie on a candlestick in the pattern of supply and demand that creates our bias for future prices. So we don't just stop there. We have a compelling pattern. Bar by bar analysis, we use both in connection with the setup and the management. Where is this picture that we're talking about? Where is it in the trend? Where is it on support and resistance? What do multiple time frames say about the likelihood of this pattern working? Volume, moving averages, we say they're secondary. I'll kind of show you on charts why. Hey, I got this pattern. What are the broader markets doing? We have very simple and accurate market internals. All they do is, and we have different levels for swing trading and day trading, and we just use them to tell us when the market is getting too hot or too cold, meaning that they're near turning points. So the probability of your trade, if it's against the bias of that, is going to be less, and it's a warning sign. Position and money management, trader psychology, these are integral to anything you do in life. Running a business, trading, you need a trading plan. And then I say the psychology is having the discipline and patience to follow your trading plan. When things aren't lining up, you don't, like a hunter. A hunter knows how to shoot dove and deer and other things. You don't just go out to the deer stand and start shooting. You have a specific methodology. And if it doesn't line up, you don't pull the trigger. These are just 9 simple, beautiful, bullish setups. We call them money patterns on any time frame. This could be a 5-minute buy setup, 15-minute, weekly, monthly, it doesn't matter. And the flip of these are also obviously apply to the short side. So this is our starting point of that prior slide I showed you. So you might be asking yourself, well, Dan, I quickly read these things, gap, 180 reversal, bullish 1, 2, 3, W bottom. But I thought you said you were going to be talking about bottoming patterns today. I am. So bottoming pattern is not on these. So and we have obviously more than just these 9. And there's different types of, see, I'm gonna make a distinction between a bottom, because you can have a V bottom, which could be a climactic buy setup. You could have a 2, 3 bar reversal. This is a W bottom reversal, but I don't call these bottoming patterns. So just, you'll see here in a moment when we start getting into all the examples, bottoming patterns are down a lot. They have a price void. The sellers have been in control, and it's starting to bottom. And today I'm going to teach you how to recognize quality bottoms and the exact point of where to enter. So why do I have a picture of Inspector Clouseau here? Because I'm just talking about some considerations here. My partner Greg Capra over at Master Trader, he's been he's the pioneer in technical analysis. I've been working with him for 30 years. He was trading before there were direct access trading platforms. Bottoming patterns are treacherous is just one of his sayings. And why is that? Well, because many of them fail. Many of them might give you a bounce and get smacked back down. So we monitor them, and we're, here's just a kind of a synonym. We're looking for an event. And what do I call an event? And that's why we're Inspector Clouseau. You'll see in all these examples. I'm going to show you, well, is this event okay? What about this one? I'm still waiting. I'll tell you when I see it. We're looking for something extra to suggest that the bottoming action is over. It could be a downside shakeout, a gap reversal, a wide range big fat bar on volume. Turns, particularly when we do climactic buy setups, turns by definition happen on a smaller time frame. So just to give you an example, I've talked about trading climactic buy setups in this Festival of Traders venue a couple of years ago. And so could you buy over a prior bar's high as anticipating a V bottom? Yeah, you could. But what we recommend is going down to an hourly time frame, let it build support, and then trade a breakout on a smaller time frame, and then go back to trading your bigger time frame. The first slide I showed you, all of those other concepts that make up our total method, we're always overlaying those other concepts to say, I'm ready to pull the trigger. So anytime you see me look at a chart, you'll hear me talking about those other concepts, because it's one concept is just a concept. It's not a trading strategy. So this one was soon. We traded this just a couple days ago. Breakout from a bottom ring pattern. What are the tells? Well, this is a daily chart. All of our charts are this simple. Red and green candlesticks, color-coded volume. The blue is the 20, 50, 200. We call these visual aids. That's why we say moving averages and volume is secondary. I mean, look at all this. There's no volume down here other than this spike here on the breakout, which is a positive. So we just pay attention to spikes and see if they're in alignment with the pattern that we're trading. So let's take a look at this. We're in a downtrend. I got parallel and declining 20 and 50 moving averages. And throughout all these examples, you're going to see how the best bottoming patterns are going to occur when the 20 at a minimum and the 50 also preferable are flattening out. Now, why? Just think about that conceptually for a moment. What is a moving average? Well, it takes the closing price on that time frame and divides by X and points a squiggly line on there. So this angle of this blue line is just very simply showing you the average of the last 20 prices. And the next day, it drops off the last one. And that's why it's a smoothing indicator. So if both the 20 and the 50 are turning horizontal, if I were to take the candles off of this chart, you should be able to tell me that, yeah, Dan, you know, I got a long-term uptrend. I got this red line is my 200. That's my longer term, and it got extended, and I've had a short to intermediate correction, and now these moving averages are telling me the short and intermediate correction is ready to break out. Do we trade moving averages alone? Absolutely not. They're, as I said, they speed up the analysis. So what are my tells now? Small breakdown failure. See, it's getting tight. The ranges are getting tighter now. This red bar was a bearish engulfing bar. And you might say, here we go again. Here we go again. This stock's going to now break down. You know, it's a dog. It's a consolidation and a downtrend. And that very well could have come to fruition. And so I'm giving you, through all of these, I'm giving you the clues of when it's time to act. And on all patterns, not even just bottoming patterns, every pattern we trade, remember those 9 that I just showed you? We have a concept called we need a price void. What does that mean? For longs, it means look to the left. There's insignificant resistance because of the momentum move down to allow for a nice move back up. Where was my entry on this one? And the answer is red bar ignored breakouts. This was a fairly large red bar that suggested lower prices. The very next day, notice how it gapped up deep into this bar and then took off. That is my entry. You buy over the high of the red bar, stop under the low, manage in between. But I know I have a void, so my risk to reward is trade. I just grabbed this, I don't know, I forget how many days after. But look, here's where we entered, and it went up to almost $13 up here. And we're traders. So bottoming patterns, I'm not telling you that we're buying this for a core long. And you know, we define core long as holding period weeks to months. We are traders. These are swing trades to us, unless it's a quality stock and the monthly and the weekly chart are also bottoming, but that's a little much to cover. So this stock bought over the high, stopped under the low, and went all the way to 13 bucks. Let's continue. Won't spend as much time on these others. Momentum moved down. See, this is just a bounce and a downtrend. New low. And every chart is different. Similar to if you're a professional poker player. Every hand you're dealt is different, but you have the expertise and the knowledge and the patience and the discipline to follow your trading plan and playing poker. It's no different here. My partner Greg has his amazing swing trading course, and that has all of the concepts to reprice action. So what do I have here? I have a new low reversal. I'm just building information. That's not a tradable event. Now I have a wide range bar and what we call a bullish 1, 2, 3 continuation. Could I have bought that over the high of this bar, target this prior high as a swing trade? Yes. Didn't trigger though, so I got, got nothing to lose. Went down, snapped right back, bullish price action at resistance. So for you classical technicians, this is an inverse head and shoulder bottom. But now my 20 MA is flattened out. This is a similar type tell. The message is similar to this red bar, but in a different location, different color. But the message is a bearish gap down in a deeper tracement back to resistance. That bar is telling me on a breakout, you're good to go. Stop under the low. It's exactly what we did. This is a closed trade. We document all of our open and closed trades in the members area at Master Trader. We give the date, the stock or option trade. What we did here, we always give the technical setup. We don't just say, oh, buy this, short this. We give the technical reasons. Breakout of the bottoming pattern at the 20 MA. W bottom and new low plus weekly. Oh, that's a mouthful. Well, remember I told you multiple time frame alignments is part of our approach. And I can see it here myself, this momentum move down and this up on if you would condense the data, the weekly chart is going to show you a W bottom with a new low plus, which is right here. And then we give management. First, their target met here, we trail, 12, we were in this thing 12 days. Swing trade, there's the profits, return on capital. Now, I'm purposely giving you some bad examples. Consolidation and a downtrend under the 50 MA. So look at the power of this. Has it stabilized? Yes, it's stabilized, but it's still, I got a 45-degree declining 50. Even if it broke out, I mean, for a day trade, it's an expensive stock. You might get 5, 10, 15 bucks for a day trade, but it's a horrible quality swing trade. So what I write here is, bottoming patterns, we also love to sell out of the money put spreads. What does that mean? We find a pattern that says, look, I don't think it's going to go up or much. It looks like kind of a dead animal, but I'm pretty darn confident it's going to stay under this red bar. I go to the option table, obviously make sure they're liquid, and I see how much premium I can get for selling the 210, either naked or putting on a spread to lower the max loss. And then I put a put spread on this one. This one, horrible. It's just slopping around here in a downtrend. You see? So look, there's no breakout. I wouldn't even do a put spread on this one. So let's go back to nice examples. Momentum moved down. Could this have been bottoming over here? Possible, but you've already heard me repeat a few of these same terms. Angle of the 20 and the 50, and I'm going to keep saying tells, T-E-L-L-S. This, until you give me some tells, this is a consolidation and a downtrend. New low. Gap reversal, new low. There's still no pattern, but now that's a tell that I'm starting to pay attention. Red bar. Uh-oh. It's a dog. It looks like it's going to make a new low. Nope. 180 reversal. I still need a pattern. Look at all this resistance over here. So I don't have a price void yet, but it's building a bottom, which is allowing the 20 and the 50 to flatten out. I have a monster price void over here because of the momentum move. So where do I enter? Could you have entered on this breakout right here? Yes, you could have. Stop would be, under this base right here. So even though it came in, you didn't get stopped out. I think I didn't see it then. I saw it here on my gap list. So it was a gap breakout, and there was a small tail there. So I forget if we bought a small pullback or 30-minute high, whatever the case. I don't remember. But wherever I entered it, stop under the prior bar's low. Increased volume confirms. It helps. It's a plus. Would I still have taken this pattern, but without the volume? 100% I would. But it's a plus. These are two different stocks. Momentum move, little downside shakeout, went sideways. Here is, could I have bought right here, this little bullish consolidation? Yes. I'm just trying to be candid and saying I probably didn't see it then, but you could have. Here's where I saw it, a 180 reversal with an inside bar with a huge price void, a huge multi-week bottom. So we bought call options in this case. Instead of stock, we bought calls, which gives us limited risk and leverage. And we 180 breakout of a bottoming pattern at the 50. There you go. And see, this one didn't trigger yet, but these we send in telegram to our subscribers throughout the world. So we say once the stock trades over 780, buy the call options. LPG, same. W bottom retest. Could I? Well, see, this one I did put an arrow here. I should have put an arrow right here also, because that was a good entry right there. So now I have a pullback here. I have a buy setup, and I'm looking to get back in as a retest of this buy setup. Long-term uptrend, in short and intermediate term correction. So this is more of a bottoming pattern, consolidation in a stronger stock, because we didn't get the massive momentum move down as I showed you in some of those other ones. So this one, nice closing breakout. You could have bought over the high, but it didn't trigger. Red bar. So I'm monitoring. I need more data. I don't know what to do yet. Then consolidated, engulfing bar. Now I'm ready. Now I'm ready to buy over this prior bar's high. Michael here's asking, major pivots of trend or swing trading bottom? Well, it's going to be both, because remember, if you got the 20 and 50 flattening out, then that's going to create major pivots on the bottom, 100%. So our swing ladder trades stocks, options, long, short. It trades anything that moves. And my partner Greg gives very detailed techno-fundamental analysis on the weekends. Ton of education in there. Telegram, open and close. We got a 2-for-1 deal on that particular ladder. You can check it out. So here's another example of consolidations in a downtrend under the 20 and the 50. There's no tells. There's no flattening of the MAs. In Greg's course, he would use these examples as those are powerful downtrends that you can continue to hold short, because there's no confidence of a turn whatsoever. And I think you can see that just based on the examples we've gone through so far. This actually is Tesla. Greg and I alternate doing monthly coaching for our subscribers, lifetime coaching. And this was a chart I put together for them. So we're in July right now, but this is March and April bottom forming. And that's today's session, right? So the weekly chart was a climactic buy setup on Tesla to major support. So I started monitoring this thing every single day, every day. And we had a lot of trades in between. But for today's session, okay, Dan, you're talking about bottoming patterns. Yeah, and that's exactly what this was doing. Look at my 20 MA flattened out, the 50. Okay, Dan, so tell me where to buy. And it would have been over the high of these two green bars right here. And then we added over this bull rectangle continuation. Here, let me pull it, just Tesla real quick, because it's been a good trading stock. So it went all the way up from this pattern that I'm showing you right here. It went up to $360. And now it's back to 296. So it gave it all up, but it's not even a bottoming pattern watch right now. It's a big old mess. Long-term up trim, short and intermediate term, do it. So see, there's nothing to do. I'm watching because there's no price pattern. Now I have a deep retracement. It went all the way back to here. But remember, we're price-based traders. So Dan, tell me where to enter. I will when I see it. I will when I see it, I'll tell you, I promise. But this deep retracement, I'm starting to watch. Going sideways, 20 MA flattening out. Now these dots here on our software, it's nothing proprietary. We don't use the word proprietary because we don't believe in it. We think it's misleading. People trying to sell you a bag of goods, and we want you to read price action. So what are these dots? It's a major pivot low. We define it as 3 or more higher low bars to the left and the right. So the fact that there's a dot here tells me that I made a new low. So I made a new low and it snapped right back. That's good. That's a tell. Now I have a wide range breakout right here. Could I buy over the high of this bar, stop under the low? Yes. Now I have a bull 1, 2, 3 continuation. Same. Buy over the high, stop under the low. Now I have what we call a 1, 2, 3, 4 from a bottoming pattern. That's where I have a second inside bar that trades under the low of the prior one and snaps right back. Greg, he calls this a money pattern. He's like, you need a void, of course, like we have here from a bottoming pattern. The odds of this trade working, you buy over this bar, stop under this number 4 bar right now, is staggeringly high. But it's from a bottoming pattern. This thing, dead animal, broke out, failed, broke out. So this breakout, I'm starting to monitor. But it's a mess. It's a mess. It's a mess. Gapped up, ran. I'm not chasing it. Gapped up. Now I pulled back. Now I have a nice green bar. Now I have a bull 1, 2, 3 continuation. Looks like we bought call options on this one. So here's my wide range breakout bar of a bottoming pattern at the 20 MA. So I actually gave it this day over the high of the bar, but it turned into a 1, 2, 3 pattern, which is better. So we were in this 13 days, $800, yeah, 160% return because we bought call options instead of the stock. Every one of our patterns, I mean, we could talk 10 hours on. It's just more examples, but all the examples are not originated, but they're the answers of the analysis are from Greg's swing trading course. So here we go again. It's just a different flavor. Power downtrend, 20 under the 50. Now see, is this a quality bottom right here based on what you've learned in the last 30 minutes? Absolutely not. Declining 2050, there's no tells, right? That term I keep using. New low, pick up in volume, 180 reversal. This big ugly red bar suggested lower prices. Nope, not so fast. Big fat green bar, 2 inside bars. Now I'm ready. 1, 2, 3 continuation at the 20 MA after a downside shakeout. We called this a downside shakeout. It made new lows, took out all these stops, and snapped right back. Downside shakeout, I got my price void. This one, 10-day swing trade, easy to manage, management in between. You know, this one, you know, sloppier. Where am I going to get in? Well, here it rallied right back to the top, but I have a 1, 2, 3 and a price void. Bought call options on that for a little 4-day swing trade. This one's just a vanilla breakout, so that's fine, and it's also a tell. Why? Well, because it took out the low of these 2 bars and then closed with a closing breakout. So that was very viable. But then it came slamming back down. It got messy, messy, messy. I still got a rising 50, and here was our new place that we entered. So that's where we gave this trade. We were in it for 7 days, breakout of a bottoming at the 50 MA right here. We'll see, everyone's different. This one, I remember this one was actually earnings. And this one broke down on earnings in a downtrend. In a downtrend, suggesting lower prices. But look at the weekly, was a climactic buy setup. And this tail was a retest of this prior tail. So look, this thing's down from over 160 bucks, and it's really going sideways for a month. And the fact that it negated the breakdown and closed with this range expansion engulfing bar on increasing volume, that was our tell. That's our tell. The next day, buy over this, stop under this. I got a huge void here, you know, 90, 95 bucks. I got a huge target. You know, the same but different. Oh, this is one. Yeah, I wanted to show you here in the remaining minutes a few that we're watching right now. This one I had been watching this one for a couple weeks. 2050. This is Merck. This is today's chart. I gave to the green room, buy over the high of this red bar. Because then I got a 4-bar retracement into this igniting bar. Buy over there, stop under the week's low, and that's what we did. We just bought a half lot this morning. We're in the trade. Asian. So I'm purposely showing you something different here. I'm just calling it a short-term breakout from a bottoming pattern at the 20 MA. But notice how the 50 MA being way up here is totally different than these other examples I've been giving you. But it's still been going sideways for a couple weeks. So I didn't give this one to subscribers, but we traded it in our live trading room, and I grabbed this morning also. So we bought on this little breakout right here, and you know, look, it had a nice advance into the void. Target, we're not in this, but this is on our watch list. Igniting breakout, we got a pullback. Where would be my entry, folks? Look, I got flat 20, flat 50. Here's my tell. Could you have bought over the 1, 2, 3, stop under the low? Yes, but it didn't trigger. So here's our pullback, buy a half lot over the red bar, initial stop under the green bar until it gets some altitude, and then tighten it. This is kind of similar to that ASAN trade I just showed you. You know, it's just beaten down Lulu so much, but I don't call this a quality bottoming pattern, again, because of the, you know, relation of the MAs, but we're active traders. So we bought here and had a 2-day swing trade, you know, made 8%. And these are 2 that we are in now. I gave these yesterday. Bottoming pattern, igniting, this was a buy setup. Could you have bought that one? Yes, but I didn't see it. We bought yesterday. Here's the weekly is a bull 1, 2, 3. LYB, bottoming pattern, broke out, pullback, we're in. You see, so this is walking the talk. This is what I've been showing you for the last 35 minutes. So we're in those. Target, take a look at FedEx, UPS, in the materials sector. There's a number of other bottoming patterns I got my eye on. And so this is our special for being a guest here on the show today. So Greg's comprehensive technical course, it teaches you everything from A to Z on technical analysis, all time frames, all instruments. He has trader psychology in there, how to manage trades, market internals, whatever you can imagine. So here's the link, mastertrader.com/MTS has a significant discount. And on the website, it lists out all of the modules and descriptions. And, he purposely calls and he divides them out, not into chapters, but he calls them thought building lessons. And there's very interesting psychology with using those words. It's because technical analysis is interpreting the price action and putting all the objective concepts in a logical manner where you have a bias and you have a trading plan and you have an approach to enter and to manage with proper position and money management, and that's what creates a trading business. So one concept is not a trading strategy, it's analyzing the price action just as you have seen me do in all of these examples. And the goal is when he and I are co-moderating our live trading room, when we give each other a symbol, we don't even describe it. We know exactly what we're looking at. Here is my comprehensive options course where we trade options with a technical approach. So I need a bias before I can tell you what option trade I'm going to do. So it covers buying options, selling them, climax, high volatility trades, trading on the news, some basics of technical analysis. mastertrader.com/options1000. The modules there again. Check them out. Greg and I have been at this over 30 years, so I think it's safe to say we're made our stripes and very successful in the industry. So pleasure to be with you today. Hope you learned a lot. Email me, Dan@mastertrader.com, and have a great rest of the afternoon.